Oh, good. Good morning, afternoon, good evening, depending on which part of the globe you are. This is the payment system broadcast number 28. The topic for today is Operational 75, a technical debrief of national fraud utilities. My name is Carlos Leon. I'm the moderator of this broadcast. I'm going to allow 1 minute for the people to join, and we'll start very soon. Thank you for joining. Okay, I think we have a lot of people entering right now and can start. So once again, welcome to the payment system broadcast number 28. As the usual format goes, what we're going to have is the 5 minutes of this introduction to the broadcast. Afterwards, we're going to have 45 minutes of this lively and very interesting talk with our two guests that I'm going to introduce briefly. And then we're going to have more or less 10 to 15 minutes of Q&A that will be led by you, the questions, which is a button or something you can click to the bottom right of your screen in WebEx. So once again, for the third time, welcome. Today we're to have session about the Article 75, which we all know is a regulation that came rather recently to facilitate innovation and to enhance cross-sector and border information sharing for combating fraud or crime, financial crime. So in the previous session, we discussed this Article 75 from a legal and privacy standpoint. Today, we're going to take a approach. So we're going to talk not about policy, but we're going to, if you want, technical debrief about the Article 75 and how to implement it. So perhaps just as a very short summary of time, Article 75 is just not a reporting requirement. It's a mandate to build operational capable of working at the speed of fraud and scams, or perhaps to try to do it even better. So our focus in real-time collaboration. How can we sharing of information and platforms actually required to function and environment? So today we're joined by Tavi Tanki, Crime Solutions, definitely a colleague and friend of mine here. Tavi and John, they're two practitioners tested these systems under live. As I already mentioned, the purpose of this conversation is debrief of how they have worked on this topic. So unless there are any disclaimers from you, Tavi and John, let's begin. Do you have any disclaimer or something that you? No, sorry, I forgot. I should allow you at least 30 seconds to 1 minute to present yourself. So who wants to go first?
Tavi, you go first. Oh, you're on mute.
You're on mute, Tavi.
Yeah, full disclaimer is that that Carlos, from your side, there are some connection issues maybe, or like your voice keeps coming, but I guess we got your question. But yeah, my background is I'm a mathematician, data scientist, and I've been using these skills throughout my career to fight financial crime. I've been stopping fraud, credit card fraud, account takeovers back in Skype. If some people still might remember this wonderful connection technology or calling technology we had. I was fighting a global fraud back there, and then I built up compliance and AML and anti-fraud teams and products at Wise or TransferWise, which was one of the unicorns definitely, but also one of the first fintechs in the market, and that gave me pretty good understanding of the regulator requirements across the world. And now I've been building my own company, Salve, for the last 8 years actually, and the core part of the focus has been how to connect the crime fighters from different financial institutions together into the strong network of crime fighters. So Article 75 and everything around it is like my dream. I've been waiting for a long time, so I'm really passionate about this stuff which is happening now in the markets.
Thank you, Tavi. John.
Yeah, my background is a little different from Tavi. So originally from a kind of national security and intelligence background, I was a computer scientist by kind of training. So I was with BAE Systems for best part of 18 years and worked across the national security kind of space, and then spent a good few years working in cybersecurity, and then moved into anti-financial crime. Most recently, I was with Comply Advantage, so a bit of a background in kind of RegTech and compliance and financial crime intelligence, and then joined F&A last summer to head up the financial crime solutions here. And ever since then, obviously, being focused on tracing fraud and fighting the good fight. And you're looking forward to the conversation today.
That's great. Thank you both. So let's start. I'm going to start with you, Tavi. So in today's, let's call it modular architecture, the intervention window of the authorities or the stakeholders often collapses before coordination even begins. When a scam hits multiple banks simultaneously, what is the exact, let's call it, point of no return where the current structure fails? And how does Article 75 meaningfully change this dynamic?
Yeah, that's a good question. And like in order to explain it, I would like to visualize it. Or if you can imagine, we have been throwing out constantly visuals like how to follow the money, or like how the money criminal proceeds are moving through between different financial institutions. And like if we talk about scam fraud especially, then like usually the victims' money originally sits somewhere in the retail banks, or at least victims are holding accounts in the retail banks, large institutions like HSBCs or Deutsche Banks or Swedbanks or similar, which are like pretty static to give the feeling of the security. And like when these people are getting scammed, then they're usually sending money to the second domestic bank, which is slightly smaller, like neobank, maybe local fintech, and then from there, accounts are already controlled by the money mules, or they're controlled by the criminals already. And the next stage, the third stage, is actually that from this neobank, maybe this money moves into remittance, like international fintech, which can be used to send the money across the borders. And then from there on, like it goes into some crypto companies, and in the crypto space there is like multiple hubs. So that's like the linear order. But actually, even if you look where this victim is getting their money, sometimes they're getting the money from their own account, but quite often also they're taking loan from another institution, so like online debit providers who are giving easily money to these trusted victims. So as you can imagine, there is like follow the money. It has like several stages, some controls by the victim, some controls by the criminals, some controls by the money mules, and there are several hops. And these hops are always, thanks to the real-time payments, these hops can happen really quickly, but they don't happen in real time. They don't happen in milliseconds. They are happening in seconds, sometimes in minutes. So to give you the answer, like what's too late, or when the money is out of control, in my mind, it's out of control when it's cashed out, like through the ATM or into the crypto space. But time between the robbery or like cheating or scam action and the money goes away, it can be measured in minutes, sometimes in tens of minutes, because like criminals are also not ideal people. They have some hiccups, they have some stops, and that's like roughly the time window that we see is that technology wise or messaging wise, information exchange wise, if crime fighters can exchange knowledge within minutes, not in hours or not in days, but within minutes, then actually they get back pretty decent amount of stolen money, because that's enough to catch it, like on the second stage or third stage or fourth stage, before it's out of control. But yeah, there isn't a single truth, like is it like it's not 10 seconds, it's rather 10 minutes that's needed to capture the money. And the other part of the question you had, like how does the article AMLR and Article 75 helps here? Actually, I'm before answering that question, like I want to highlight also another really critical and important regulation which is coming out, which is payment service regulation, which is touching the payment service providers, which are most of them, like many of them, are actually banks and subject to AMLR, of course, as well. But PSR Article 83 is even stronger, and it puts even more focus on this type of the scam fraud. So in this case, like, it's not only AMLR and Article 75 that helps definitely crime fighters, but also there is another way stronger regulation which also helps them. And how does it help is like, actually it gives a legal basis, it gives a confidence for the financial institutions and for the organizations which are connecting them, like banking associations, but also supervisors, central banks. It gives them confidence that they can agree the standards, like they can agree the procedures, they can agree the rules based on what suspicious cases will be exchanged. So they're not afraid anymore that, if we are exchanging information in real time between ourselves, that something bad will happen with our banks, because like they were afraid of the GDPR, they were afraid of the Bank Secrecy Act, and for the good reasons. But now these acts are getting good balancing acts, which are actually telling that, yes, it's completely fine to exchange information. And by the way, it's not only fine, but actually it's mandatory to exchange information if you have a level of suspicion. And it outlines also the conditions, like what's the auditability, what are technical requirements, and so on. So it makes it more transparent, more easier to exchange information. So these are like you had a long, pretty open question, but I hope that I gave a sufficient overview to that.
Sorry, lost Carlos. Oh, he's back.
Sorry, I'm back. I don't know what happened. I think I heard everything, but you didn't see me or hear me. So sorry about that. And I get I think I got your answer, well, 99%. So at the end, the part that perhaps I lost is that you were concluding about something that I would call legal certainty. I mean, the legal certainty for everyone to know that that not only this is permitted, but it's that everyone should be doing it because it's good for everyone. And that's the second part of the question, which is now going to John, which is, what are those specific system-wide blind spots that emerge? The way that the criminals move that make that an individual bank trap into its own silo that simply they cannot see until the money is gone. I mean, how the Article 75 is going to deal with this or help with this?
Yeah, so I think that intervention window that Tavi was talking about, the thing that opens that window is like the scammer or the fraudster, they actually make a part of their financial infrastructure visible, because the victim reports the fraud, and obviously the scammer has to give the victim details of an account to pay the money to, right? They have to send the money somewhere. So we get a little glimpse into the scammers and the criminals' financial infrastructure. But exactly as Tavi said, clearly the money doesn't stay there. It has to be moved on and dispersed through multiple other accounts to avoid the criminals losing that money, like as it's tracked down. And so I guess all the other institutions involved in that onward movement of money, they're not banking either the victim or the perpetrator. They're potentially like multiple steps away from the scam transaction. They never get to see the details of the initial scam transaction by default. So the transactions they get to see are between mule accounts that are doing lots of legitimate activity day to day, and they just look like normal transfers. So the first blind spot really is that a lot of the time there's no way for the institutions to even know that they're part of a money trail from a fraud or scam, because it's so hard for them to understand that they are actually connected, but they just don't see the detail. So that's where the tracing really comes in, is to make that connection. But I guess another like related blind spot is that these money mules, clearly, if it's working and they potentially like make money out of it themselves, they take a cut. They're not going to mule once and then go away. They obviously are going to keep doing it, so they're going to keep appearing in multiple cases. And so, if as an institution your customer is making a payment to or receiving a payment from an account that is one of these mule accounts that's been previously identified, you're going to want to know about it. But of course, inevitably, from the perspective of any one institution, most of the mule accounts in the economy are elsewhere, right? There are other institutions. So then the question becomes, do you have a fast, reliable way to know about accounts that are being identified at other institutions that are muling? And so without putting in place some infrastructure to trace the fraud funds and to be able to share that information in real time, it's incredibly hard to do that and to keep pace with the scale and the speed of the problem. So those are the two main blind spots.
That's great, John and Tavi. What I find very interesting is that it sounds that it's not a technical problem or lack of intent, but it's rather a problem of coordination. And this is something that we hear a lot in this type of broadcast, that the technology is there, but the coordination or the structural fragmentation, if we want, is the real problem. So the real question becomes, how do we design infrastructure that aligns institutional response with these network level threats that we are discussing? And I think that brings us a proportionality question under Article 75. So Tavi, in the middle of a live fraud event, decisions cannot wait. As you mentioned, it's a matter of perhaps seconds or minutes or tens of minutes. So decisions cannot legal review, which could take, as you mentioned, hours or days. What has to be engineered into the system so that proportionate sharing is automatically and by design? And how can institutions lay that's what they shared threshold, what we were discussing about legal certainty as well?
Yeah, that's actually something we learned. Again, I need to go back in time, like 5 years, because way before AMLR and Article 75 came to topic, I was in the fortunate situation that in Estonia, my home country, where we're running our business from mostly, our legislation already 5 years ago or 6 years ago allowed banks to exchange information about possible financial crime and highly suspicious transactions. And that was basically it. Like in the AML law, it was said something very abstract that, yeah, if you have a high suspicion, then you can exchange data points. But it was like never used because like banks didn't know how to use it or what should be the technology, what should be like the exact legal basis, how to cope with the GDPR, how to cope with the Bank Secrecy Act. It was just useful article in the legislation of the one country's AML laws, but it wasn't used. And that's where we jumped into the play and we started to discuss with the banks and with the regulators, like with FIU, FCA, Data Protection Inspectorate, like to give a like more practical operational shape for this article. And what came out was like there is like heavy coordination or a combination of the legal basis, then operational need and use cases and business need, and also technology. And this triangle between tech, legal and operations has to be always like in good balance, because like the operational needs, is it about sanction screening, alert, RFI exchange, or is it about fraud RFI, or is it data storage? These are like very different cases actually, and very different needs, and operational procedures behind are very different, and they determine different legal bases and different technology as well. And what we found out was that actually after we defined these kind of triangles for each of the use cases, like sharing PEP data versus every other case, like it was so different actually. And then we had to figure out together with the banks what is the common memorandum or rule book, or that based on what determines the common risk appetite, or like joint risk appetite in what is suspicious enough, what is called a fraud, because in different companies you can give a different meanings actually for fraud. Are we talking about victim, or like money mule, or like coordinator, or like a cashback, credit card cashback fraud, or something else? So, and this rule book actually, like they call it memorandum, was agreed between all the banks in one country, and then another country agreed their own memorandum, which was slightly different. So that was like one joint like point of truth. And the other part was that actually from this memorandum, each bank derived their own policies. Like they adapted their compliance policies based on like what's the risk appetite, like in which cases, which specific cases they can exchange information, they can accept the information, they can send it. And from those policies, they defined how should their fraud detection procedures should be changed, because like they all have even without data sharing, they have some fraud detection procedures and tools in place. So what will trigger in the procedural level, what will trigger the data exchange, either manually or technically. So, and after they went through this joint memorandum, policy updates, procedures, only then they were able to start using technology to support these operations. And at that point, when this framework was set, then it didn't require anymore for each new case detected legal assessment or basis, because people who are exchanging the cases, they are following memorandum, policies and procedures, and there is no need for approval for each of the new case, because like again, like from these policies, they have captured that they need to do the recording audit log, like a second eye review, like after the case have been exchanged, escalations, everything, which is like very, very similar to any other AML procedure that they're running. And that actually makes it possible to process this data, because like if you think about like internal fraud monitoring or maybe internal AML monitoring, which is run as is, then also like they're processing PII data, and they also need to have some basis for that. And they don't ask for each of the alert, they don't ask separate permission for analyzing this alert. So this has been put in place in the higher levels proactively, and that's the same which is happening in data sharing as well.
Thank you, Tavi. John, when network level signals are shared across institutions, and this is the whole point of Article 75 at the end, is how do you prevent this collaborative intelligence from unintentionally amplifying false positives, which is obviously it's one of the big challenges here, or how does it lead to unjustified de-risking in financial transactions?
Yeah, I think it's important to note that each institution still has to make its own decisions about managing the risks for customers. Ultimately, that's something that it owns that risk, each institution. So as we talked about earlier, like the collaborative intelligence enabled by these kind of extra network contacts, it gives firms like really powerful knowledge they wouldn't otherwise have. So when we're tracing a fraud, we will alert an institution and say, look, there's a transaction that's come into an account that you hold. That transaction appears to be part of the money trail from a fraud or scam. But then there's an important job for the institution to play, using information that only it has access to, because the institution then still has to determine, well, that transaction, it may be part of the onward movement of these funds, but funds are fungible, right? So it could also be that maybe those funds came from somewhere else, maybe that transaction is part of normal business, etc. So then the institution is using what it knows about the customer, what it learned when they did the due diligence, when they onboarded the customer. It's using knowledge of how the account balance has varied over time, the patterns of transactions and behaviors that are normal for that account or that type of customer. All of that extra rich contextual intelligence that only each institution has about their own customer. And all that has to feed into each risk decision. So the aim with these collaboration tools and environments is to augment and coordinate and accelerate the roles of all the participants, give them network level superpowers they didn't otherwise have, but it's certainly not to try and impose risk management from the center. It's a partnership, and a really critical part of that risk picture is within each institution. So I think that's important to bear in mind, and I think that's the key to avoiding this, avoiding the risk of de-risking or minimizing it.
And just
thank you, John.
Just to add to the first part of the question that you asked, like how to ensure the high level of accuracy or like low level of false positives. That's something where I've learned that it's key to work with the people who are end users and who are like the crime fighters and who are actually analyzing the cases, raising the alerts, sharing with each other. And it's like physically human, getting them together, having lunch and learn sessions, getting them to trust each other, getting them to provide the direct feedback to each other. I know that it's not doable on the European level, but in each country, this community is still like in this normal medium-sized countries, communities are fairly small, and it is possible to get like 50 people, 100 people together on quarterly or like semi-annual basis and educate them, and that actually works super well, as we have seen. Like it's we have rather opposite problem that the true positive rate is too high, and like they're exchanging two certain cases, and like they don't want to create extra work to their colleagues with the false positives, and we're encouraging them to share more openly with a slightly less suspicious cases, because they can be still good learning, and then they might be true positives as well. But yeah, like constant feedback, measuring the quality, thumbs up or thumbs down, getting people together. All these are actually helping a lot to ensure the quality of the like sufficient, not too high, not too low quality of the cases which are being exchanged.
And that's a great add-on. Thank you, Tavi, because one of the things that we're going to discuss next is the network dimension. I mean, how to use the network technology to avoid or to, let's say, minimize those false positives. And one important thing about what you mentioned as well is that if proportionality depends on human interpretation, in the middle of a fraud event, the system will fail, because I mean it's very difficult to have like this thumbs up, thumbs down in the middle of the window in which the authorities have the time to react. So there should be something that is encoded into the architecture to try to do this in an automated manner. And that's where at FNA, and for those who are new here, FNA stands for Financial Network Analytics. So we love playing. We have a lot of technology about using networks to extract insights and better information. So at the end, the idea of using networks or the network dimension may help minimizing these false positives. So I'm going to start with John, related to analytics for this purpose. So John, when you reconstruct scam activity as a network of interactive accounts, which is something that you described at the very beginning of our conversation, instead than a sequence of isolated transactions, what changes operationally for regulators and financial institutions, and how does this alter the intervention strategy?
So I think the network context it allows each alert to arrive at an institution, bringing its full context with it. So in the case of the money trails solution that we work with, we alert an institution when we see a payment going to an account they hold that could be money muling. And it's a bit like when you call customer services and you explain the issue patiently to the person on the end of the phone, and they say, "Oh, that's terrible. I'm gonna have to pass you to a colleague." And your heart sinks, and you get passed through to the colleague, and it becomes clear that no information has moved between these two people, and you start again from scratch explaining the whole issue, and then they have to do it again, and it's extremely like slow, inefficient, frustrating, and like with increasingly like faster payments, speed is absolutely critical to have any chance, because of all the things that Tavi was explaining earlier, this minutes long intervention window, to have any chance of intervening before the money is put beyond reach, you've got to be doing this efficiently. So I think real-time collaboration with the network context is more like you're in customer services, you explain the issue, they say, "Oh, I'm going to have to put you through to a colleague," and your heart sinks, and then you get put through and you realize not only do you not have to explain it from scratch, they've got all the context, but actually since the start of a call, a whole team of people behind the scenes have been working on the problem, and they've been kept updated with every new piece of information that's happened. So it's a much richer context, and it's a much more efficient way of dealing with things. And so that then radically transforms your intervention strategy from one where you are gathering intelligence after the fact to one where you are racing to catch up and then overtaking the criminals and freezing the funds before they can be moved on. So that the context completely transforms what's possible with the intervention strategy.
Thank you, John. Very interesting. Tavi, when institutions are allowed to communicate based on suspicion, rather than confirmed victim report, how does that change the timing, containment, and recovery outcomes in practice?
I think it's like very in two levels. Like one is that comparing to the situation where they need to have confirmed fraud, which can happen like weeks or even months after the transaction has happened. So like it's a suspicion versus confirmed. It doesn't sound too different verbally, but actually in case of scam fraud, the confirmation can come from the end customer who's a victim, and quite often this victim declines to confirm that it's a fraud. So this confirmation might never happen also, although it was fraud. So, but if the suspicion is internal based on the, again, network analytics that you provide, or based on any other fraud detection system that they have internally, this suspicion can be raised already in a few hundred milliseconds, like even before the transaction has happened, or based on the behavior of the account actually. So that's like the winning, like a win in terms of time. And the other is that, as I mentioned also before, is like if it's not confirmed but suspicious, it's like amount of cases that can be exchanged in real time. It increases drastically as well. Because like if you measure the number of confirmed cases, it might be, again, depending on the institution or the country, it can be in tens or hundreds or thousands. But you can have tens of thousands or hundreds of thousands of suspicious cases, and maybe these give some bits of information which are really useful for training the models in the other side. So the time is much shorter in case of suspicion versus confirmation, and the amount is much higher. And again, people for manual work, they don't like this higher amount, but actual machines love this higher amount of data points, which they can use for network analytics, but also for training different AI models. So that's like win-win for all the parties actually from our side.
That's very interesting. Thank you both. Something which is very interesting when you start thinking about the topology, the network, or the network, let's say, architecture of fraud, is that you stop thinking about detection only. I mean, detection is important, but also you start thinking about containment. How do I stop this from spreading out? I mean, just one single fraud, how do I stop the money? So containment introduces a new variable that we have been discussing, and that Tavi mentioned, like in milliseconds or split second, and that variable obviously is time. And in complex systems such as this one that we're discussing, minutes matter. So right now, what we're going to start discussing is the intervention window. So the first one, and this obviously has a lot to do with network economics, about how you can affect effectively the things that the fraudsters and scammers are doing. So Tavi, what is the measurable difference between intervention in hours versus intervention in minutes or seconds? In your experience, how does shifting this window affect recovery rates and the user experience?
Yeah, that's a good question. It's like I have some real world data when like as I said, like we launched our first network in Estonia like 5 years ago, and we have been gathering information ever since then. And actually, before we launched, we ran the questionnaire with the banks, asking them to, or survey basically, asking them to estimate, like measure what's the time of sending out some email, encrypting manually message, sending it out over the email to their counterpart organization, waiting for response, decrypting it. So it was measured in days, sometimes even in weeks if it was cross-border. If they're using Swift messages network for that, so it was like days to weeks time. And then the recovery rate, like they were measuring, estimating scam fraud recovery rate, it was like in range of like 5%, less than 5% of the recovery. But now, when we launched our system for them and like they're all integrated, then what we see is like, as I said, average response time from the counterparty is like, or medium response time is like 12 minutes. Like usually action is taken earlier, but actually medium is like in 12 minutes. If they mark the case as urgent, then usually it pops up faster and it's taking faster. But like in case of the 12-minute reaction time, the recovery, like amount of transactions for which they're able to recover at least some money, it's about 50%. So basically, what we saw is like if the reaction time is pulled back from the couple of days to 10-ish minutes, then actually there is a tenfold improvement in the recovery transactions. And that's, again, like if banks are willing to integrate more and to do less manual work and more integration, then actually this time gets shorter and the recovery rate goes up again. So there's like very strong correlation not sure even, is it like linear or like exponential curve of correlation, but that's like something that true users are seeing. And that's the most encouraging part for me, is like, thanks to legislation, like legal basis that they can do this stuff, thanks to technology, thanks to well-defined operational need and procedures, they can shorten the time, which brings up the recovery. And again, end users' losses are being reduced, but most importantly for the banks, actually their bank's own losses will be also reduced, because under this, as I mentioned in the beginning, payment service regulation will force mandatory reimbursement for quite many use cases, which means that banks are more and more interested to like increase the speed of this messaging for their own benefit, actually, not anymore for the customers.
Thank you, Tavi. And now something also related to the network economics of intervention is for John. How does this transition from intervention in hours to intervention in minutes fundamentally break the business model for mule networks?
Yeah, I think it raises the bar for criminals. So moving the money through multiple layers becomes a basic hygiene factor for them to stand a chance of keeping the proceeds of crime. But if the scams are being traced in real time and that information is being shared with other institutions, they can start using that information to screen against with transaction screening, so pre-settlement. And so the more money trails are being traced, and the more mule accounts are being used in each trail to layer the funds and move them through. The more of those accounts are being exposed through that tracing, made available to institutions, and then being through screening, being payments to and from those accounts are being held up or blocked by banks. So it's a real problem. It becomes a real problem for the scammers, which is why we see such significant shifts in recovery rates when this put in. So in Malaysia, we saw a 50 times increase in recovery rates when they started tracing fraud in real time. And then if each mule account is more brittle, is more short-lived in its usefulness because of this approach, then the scammers need more mule accounts. And so then sharing identifiers like addresses and device IDs that are associated with the people and companies behind those accounts, that can then be used by institutions to screen their customers against when they're onboarding and for ongoing monitoring. And so it becomes more difficult and more expensive for the scammers to open up new accounts and to maintain them. And so it just makes the whole thing harder and more expensive for scammers. Like the fundamental model of having to have this network of mule accounts, one way or another, that's an expensive resource. And so if you make it, the more brittle, less long-lasting, more expensive to maintain, that's all hitting the business model effectively for the criminals.
Just to add to that, like how I'm thinking is that I'm not naive enough to think that okay, this fraud we're able to stop this fraud completely in the world. But at least what's happening is like if in some countries or some banking consortiums or like some groups of institutions who are doing the like modern intelligence sharing, which means that the cost of committing fraud for criminals goes up in that segment, they will move away and they will target other countries and other banks, which is like their problem. And of course, they need to take some actions. But at least like people, that's why I'm happy to speak about these things publicly as well, because criminals also need to know that, okay, in Malaysia or in Estonia, or like this group of banks are actually using our technologies, because their losses, like criminals' cost of causing these losses is higher, and they should go to other countries, which will be looking maybe for better solutions in the future. So that's like you don't need to run faster than lion, but you need to run faster than your body type of effect.
And that's a very interesting topic, Tavi, that I have heard in several industry seminars, in the sense that, for instance, and we were mentioning Malaysia, which is why for use case for FNA, our success case, in the sense that there are many countries which are starting their fast payment systems or that are a couple of years old, and they're not taking a lot of attention or paying a lot of attention to fraud and scams. They're caring about the operation first, and then we are going to do something about the fraud and scams. you mentioned, that's the ones that are going to be closest to the lion, because the lion runs very fast, and they if they notice that there is this region which is running very fast, they're going to move to the region that is not running at the end, or that it's still waiting to see whether they should be running or not. So that's a very interesting topic. Let's going forward, and we already know, or we can already conclude that these changes by Article 75 and some other technology as well, the innovation, network analytics, and so on and so forth, it can affect effectively the network economics of fraud. Now let's turn to who does it, or where should it be standing on. So at the end, is who owns and governs this capability at the national or jurisdictional scale. So for me, it's rather clear that there are like two different ways of doing this, and I think they're complementary. They do not compete. The first one is commercially provided collaboration platforms, and the second one is nationally overseen utilities. As I said, I think they do not compete, but they create like a virtuous circle, or perhaps a flywheel against fraud. So John, from a system architecture's perspective, what is the role of the different stakeholders, let's say central banks, regulators, banks, law enforcement, payment systems, in such an architecture?
Yeah, we've seen how bringing all of those parties together at a national scale can absolutely shift the economics. But the difficulty with that is that no one firm is either incentivized on their own or even able to make that happen on their own. And when you're tracing, as we are, trying to trace in real time, every institution that's missing from that picture is potentially creating gaps in that money trail. You're seeing a kind of a black hole where information should be. So there's a unique role to be played, I think, firstly by central banks and supervisors in bringing all the right players to the table and creating a shared platform they can all use to collaborate. And then bringing the payment rail operators into the picture is critical, so you can get fast access to the transaction data, so you can trace in real time. We talked earlier about how the institutions themselves, they bring a unique part of the picture that isn't anywhere else, which is this rich customer intelligence and behavioral intelligence. And then I guess the final part of the picture is probably law enforcement, national law enforcement particularly. You bring them into the mix, and then that creates opportunities to exploit this intelligence that we're creating around mule networks and use it to take law enforcement action as well against the perpetrators, as well as seeking the recovery of funds. So it's a multi-pronged attack on the problem.
And
Thank you, John.
yeah, from my side, how I see it is like these domestic initiatives are usually good. They are like small enough because the countries can be large, but actually communities who are running banking industry are small enough. And sometimes they're running actual public tenders and RFPs, and like they're looking for providers from private sector to join. Sometimes they're not looking and building their own stuff, which is good. Like, but at the same time, like if we are expecting like from the private sector and commercial initiatives, if we would expect that countries themselves would agree some standards like of the how to exchange knowledge across the borders, I think it will take a lot of time and it might not succeed. Or like it might succeed, but in the wrong basis, and it won't be useful actually for the end users. So like we working closely with the banks and crime fighters in these banks know pretty well what are their needs in different legislations, different countries. And like our job and mission is to make sure that yes, like as a commercial initiatives, we're running our businesses and we need to work together, but also we have a mission to ensure that there will be like a common infrastructure between the countries established. And if this establishment is coming from the private sector, it's much more likely that it will work also for the private sector, like financial institutions. Otherwise, like especially when we talk about European Union, which is my home region, then over here, EU level guidances are reasonable, but the EU level implementation might end up with something which is suboptimal. But if it's delegated to the like private sector, then that's our job. Like we compete with others, like we need to provide the best infrastructure. We need to agree mutual standards. It's like otherwise, like if you can imagine like GSM mobile network, if each country would have their own network which couldn't connect to other without even without roaming wouldn't exist, then it would be really bad network actually in the end. So that's what we're here actually to build our business, but also to ensure that this infrastructure and the crime fighters would be well aligned across different countries, which is not a small task to do actually.
Not at all. And as I mentioned before, most of our broadcasts always conclude that the problem is coordination. It's putting everyone like on the same page and looking for the same thing altogether. And Tavi, you question to you, which is about challenges. You were talking about the cross-jurisdiction challenge. Perhaps there are some other governance, resilience, and interoperability challenges that we could highlight, perhaps at the local level.
Yes, like one is the of course, like when we speak with the banks and the like banking associations, there's like top 10 objections, like which is like why things cannot be done even under the Article 75. Even like if I'm speaking with some countries, they completely understand, like banking association in country X, they completely understand the Article 75 and they're moving on and they're establishing some practices already. And in some other countries under the EU Article 75, they think that it's not applicable for us, or like it's not it's not yet in our legislation. So that's one thing, is people misinterpret or like mix up the directive versus regulation, and like if it's regulation which applies directly across the whole Europe, they don't accept it or they don't understand it. That's one big thing. And the other is that as there is like incremental attention on that space, and there is also incremental noise on that space. So for the domestic initiatives, it's very hard to distinguish like who are the people and companies who are just talking about their visionary ideas. Maybe they have a really great multi-party computational like technology in place or something, but they don't have yet the working product, or they don't have yet experience from the market. Versus which are the companies who do have.
It was not me this time. Let's wait a couple of seconds for Tavi to get back. Okay, I think we can go on with the next question, perhaps in the meantime, John. So this is our last question from the list of questions that we have for Tavi and John. So perhaps I'll have to rephrase it once or to repeat it to Tavi afterwards, but that's fine. So John, if a central bank, intelligence unit, or payment system operator wants to be ready for the 2027 AMLR deadline, what is the first foundational step you think they should take today?
Yeah, I think so. We've talked a lot about how like this is not just about legally enabling the sharing, but also taking practical steps to ensure that sharing happens at scale. So I think the starting point for me is to think about how institutions will collectively identify these opportunities to collaborate. What infrastructure do they need to have in place to make that collaboration work effectively in practice? So that's from the kind of the central bank or supervisor, the sort of central perspective, and then from the perspective of each institution, to be ready to proactively engage with that in real time, to be able to leverage this network context that's going to be available, and to be able to bring that intelligence, so all that identity verification, KYC, the transaction monitoring, all that intelligence, bring it together and be able to quickly access it and use it to be able to make rapid risk decisions when needed.
Thank you, John. Tavi, welcome back. I'm going to repeat the question. It's the last question that I have on my list. It is the following. If a central bank, an FIU, or a payment system operator wants to be ready for 2027 AMLR deadline, for you, what is the first foundational step they should take today?
I would, first of all, I would say that in Europe, there are mostly banking associations who are taking the lead. So central bank or FIU should encourage or nudge their banking association guys to take initiative. So the private sector should lead it, not the public sector. That's one thing, delegating this job to them, because ultimately banks are regulated, not central banks based on this law. And second is actually the people from banking association, they should contact their peers from the other countries which have been at once, like a more 2 years ago already implemented something similar. As I mentioned, like in Estonia, Estonian Banking Association, they have lots of good experience in Latvia, but also I think in Spain, there is a good initiative going on. In Netherlands, they have been running the TMNL, which was unfortunately closed down. It's not too crowded actually, but this experience, ask like how to run the RFI, what are the questions to ask, how to run RFP, what are the things. So these best practices are already evolving. They just need to learn from each other and copy paste what has been working, and then it's easiest for and fastest to proceed for them. Like today, we have already 3 ongoing RFPs across EU only, which are pretty similar, and it's clearly visible that these associations have learned from each other, and that they're like quite well in sync.
Thank you, Tavi. I always like to end my questions with a very simple and quick one, which is appealing to your crystal ball. How do you see this in 5 years? I mean, how do you see a mature fraud sharing ecosystem, and how should it look like by, let's say, 2030? What it should be different from what we have now? Very quickly to address 2 questions that we have from the audience.
Like how I see it is, it will be like Swift, similar to Swift network for processing payments across the borders. Like it's a standard, everyone has access to use it. They know how to use it for payment processing. So in similar manner, the FinCrime information exchange will run as smoothly as Swift for payments today.
Neat and short. That's great. John. Yeah, I think exactly the same. I would build on it and say that I would hope by kind of the crystal ball timeframe, we're also then leaning into dealing with some of the ongoing issues of getting on top of like the moves out into crypto and through cash and cross border, and really getting to grips with those other mechanisms that criminals are going to have to turn to move the money, because countries are going to get so much better at tracing through the traditional payment rails. So what you're perhaps saying is that for 2035, we should have already the crypto networks already in this network. We need to get on top of it. Yeah, we need to get that visible. That's true. It is visible, but we need to do something about it. So thank you, John and Tavi, for this. I'm going to give you very quickly 2 questions that we have from the audience. The first one is, why hasn't payee confirmation or payee verification been more successful in stopping fraudulent or misdirected payments, especially as part of the instant payment rails?
Like my answer is, that it's like these kind of things or extra controls, none of them is a silver bullet. Like always, criminals are finding ways how to bypass them. But like each of those controls has some impact, which is not like maybe drastically visible on the global scale, but it makes things more expensive. It makes their business case less profitable. So, and we need to keep adding more and more layers on the top of it, like when we're fighting the fraud. Because like if we think that like 20 years ago, we figured, like we worked with device fingerprinting and device IDs and blacklisting and like developing patterns, and like back in Skype, I was hoping that okay, this new layer will stop all the fraud, but actually it wasn't the case. It was more about like defining these more and more layers, and that's what we're doing now as well. Like proof of pay is definitely useful, although we don't see that it has halved the fraud losses, but it's definitely helping maybe a few percent. And then when we add data sharing, maybe it will add 10% to the benefit and so on. We need to keep innovating along in the same pace with the criminals, actually.
A cumulative effort. Yes, John.
Yeah, I would build on that to say that confirmation pay is obviously great for helping in situations where the nature of the scam is such that you're not paying who you thought you were paying, and then confirmation pay is a useful control. But if the scam works in such a way that you're paying exactly who you thought you were paying. You're just not paying for what you thought you were paying for. While confirmation pay is of absolutely no use in those scenarios. So there are plenty of other types of fraud out there that will just work around that control line. So it validates not everything.
And I agree with that point, John. I was thinking that with social engineering, it's very easy to scam someone, and even if you hear a weird name as being the destinatory of the money, with social engineering, you are so, and if you target someone who is naive enough, they won't care about this alert. That's the thing. And the second question is, if we successfully move to intervention in minutes and break the economics for current mill networks, do you observe criminals shifting towards slow scams or non-monetary assets to arbitrage the system again? Once again, the lion and the people running thing. What is the thing that is not running right now? Perhaps that's the question.
I would bet that it's like as the costs of committing fraud are going up, as we discussed, then also like they need to target more valuable cases, like and the higher value per case, and they're willing to put in more effort and more time per single case, which means that it's like we're probably going to see more these kind of romance scam type of things where they're nurturing their victims like for weeks or a month to get hundreds of thousands out from them, which is like in this case, if it's like very slowly growing case, then actually speed of stopping the money wouldn't help, or like there is like the quality of these cases will be much more higher, which is like for the internal fraud teams, it's also high, more difficult to detect the cases, because like ultimately we should not forget that this data sharing, intelligence sharing is useful only if one of the parties has some level of suspicion. But if they don't have suspicion, it's like there's nothing to share. And if criminals are putting so much intelligence and effort into that there is no suspicion, then it's like very hard to share any information about that as well. So that's what I bet will happen.
Yeah, I think there are ways, obviously multiple ways this can evolve. For the fraud or scam to work, we talked about it a bit earlier. The initial payment needs to be believable. Needs to look normal and commonplace. Otherwise, the victim won't fall for it. So there's some constraint around how rapidly that can evolve. But once you move beyond that into the muling, the gloves are off. If you like, it's much less constrained in terms of how criminals can evolve that. Which I guess links back to the previous point about why I think it's so important for national utilities to keep on top of the payment schemes and the payment rails that criminals are using to move the money. So looking into like cash, crypto, and cross-border. And I guess the final point I'll make on that is that if you want to have a live view of how criminals are actually moving money, what you really need to do is to be tracing the movement of criminal money, and so the two kind of feed into each other. Once you start tracing, you can see what's happening there, see that as it evolves and changes, and then make moves to keep up and keep pace.
That's great, John. Tavi, thank you very much for joining us today. We're 1 minute past the hour, but that's fine. So everyone, thank you for joining us for the Payment System Broadcast number 28. I think this has been a very lively and interesting conversation with Tavi and John. You can find their LinkedIn profiles in the QR codes that you have on the slide on the screen. Again, thank you, John. Thank you, Tavi, for joining us. See you soon. And please keep in mind that we're going to have in a couple of weeks, the dates are to be confirmed, the 2025 SupTech report. That's going to be our next conversation in this broadcast. So thank you very much, everyone. Have a nice day.
Thank you.
Thank you.